Welcome back, viewers. You're watching The Savera and I'm Shefali. With Dhanteras just around the corner, both gold and silver are experiencing a historic surge in prices, reflecting a growing investor appetite for safe haven assets amid global uncertainty. Internationally, gold climbed past $4,300 per ounce today, marking its strongest weekly performance in 5 years, while silver exceeded $54 per ounce, surprising records last seen in 1980s. In the Indian domestic market, gold futures open at rupee 1,31,429 per 10 grams on the multi-commodity exchange and trade consistently above rupees 1,31,600 during the season. Silver also reached an unprecedented high of rupee 1.68 lakh rupee per kilogram, indicating a broad-based rally in precious metals. Analysts attribute that the surge to combination of geopolitical tensions, trade frictions, and concern over the stability of financial institutions, particularly regional banks in the United States, alongside expectations of further interest rate cuts. Market experts say that ongoing rise in bullion prices is a reflection of heightened investor interest in safe haven assets amid global uncertainties. Fear surrounding that U.S. economy, increasing trade disputes between the United States and China, and emerging signs of stress within the financial system has prompted investors to turn to gold and silver as protective instrument. A commodity trader noted that the current rally is unprecedented, with gold breaching the $4,300 mark for the first time and silver crossing $54 per ounce, achieving levels not seen in over 4 decades. The consistent upward movement in other precious metals, including platinum and palladium, further underscores the shift forward safer investments amid concerns about slowing growth and deteriorating credit quality in major economies. Silver's outperformance compared to gold has drawn particular attention. Yash Sadani, Assistant Vice President of Investment Strategy at One Finance, explained that silver's stronger rally is largely due to its broader industrial applications. While gold primarily serves as a store of value, silver is extensively used in electronics and renewable energy sectors, creating higher overall demand. Global geopolitical tensions, trade conflicts, and ongoing military crises have heightened market uncertainty, prompting central banks and investors to favor bullion as a hedge. Interest rate policies and central bank buying have both played a key role in driving bullion prices higher. Sadani highlighted that while inflation remains within historical norms, strong net purchases by central bank and expectations of interest rate cut have lowered real yields, making non-yielding assets like gold and silver increasingly attractive. Retail interest in silver has surged, driven by its industrial utility, particularly in electronics, green energy, and emerging clean technology applications. Regarding investor sentiment and market outlook, Sadani cautioned that short-term price movements are difficult to predict, given the volatility of global and domestic developments. He advised investors to focus on long-term wealth creation and maintain balanced asset allocations rather than chasing recent highs, emphasizing that past performance is not indicative of future returns. Gold and silver historically experience periods of stagnation or decline, making measured investment strategies essential. Domestic factors are also contributing to the rally, particularly in India, where Dhanteras and the Diwali festival traditionally drive strong physical demand for gold and silver. Ajay Kedia, MD and Director of Kedia Advisory, noted that the current prices have crossed rupee 1.30 lakh per 10 grams of gold, while silver has doubled in value compared to last Diwali. He attributed the rally to a combination of geopolitical tensions, interest rate movements, and recession fears, suggesting that buying activity may continue during the festive season. However, Kedia also advised caution, warning that unless global concerns ease significantly, the market could experience correctives post-festivities. He projected that gold might test the $4,500 mark, while silver could approach $72 in the next term. Silver, often referred in as the poor man's gold, is attracting significant retail and industrial interest, particularly from sectors such as electric vehicles and renewable energy, where demand is expanding rapidly. Experts suggest that silver could move forward $58 to $60 in the immediate term and potentially reach $75 in the longer run. Although entering the market now may carry higher risk, given the recent doubling in prices. While gold and silver are expected to remain in focus over the coming weeks due to the festive and wedding season, experts advise investors to avoid short-term speculation and adopt a balanced, long-term approach. For now, a combination of inflation concerns, expected interest rate cuts, and global uncertainty continues to drive the rally in precious metals. The trajectory of gold and silver over the coming months will largely depend on development in global trade, central bank policies, and investor sentiment, with the potential for further historic high if uncertainties persist. That's all for now in this update. Stay tuned to the Savira, download the app, and follow us on various social media platforms.